All right, let's talk about the holy grail of trading, spotting a massive trend reversal. I mean, it's everything, right? It's the difference between catching a monster wave and getting absolutely wiped out by it. Today, we're going to decode a super powerful but often overlooked pattern that's designed to do just that. Welcome to Wealthy Lead. This is the question that keeps traders staring at the ceiling at night, isn't it? You see the market just screaming higher, everything feels fantastic, but that little voice in your head is saying, this can't last forever. You're hunting for that peak, that exact moment the music stops. But let's be honest, most of the time, by the time you realize it's happened, it is way too late. And that's the brutal reality for so many of us. You get steamrolled by the reversal. You see, retail traders often pile in during that last gasp of euphoria. Right at the very moment, the big institutional players are quietly offloading their positions. Then, the floor just drops out, and you're left holding the bag. But what if? What if there was a specific pattern that could act like a fingerprint, revealing what those institutions are up to, right on your chart? Okay, so here's how we're going to break this down. First, we'll tackle what I call the reversal riddle, this universal challenge we all face. Then, I'll introduce you to the star of the show, the Quasimodo pattern. We're going to dissect it piece by piece, then see how it stacks up against a more famous pattern to really show you its edge. After that, we'll get into a practical playbook so you can actually use this stuff. And, most importantly, we'll talk about the risks and realities, because, spoiler alert, there's no magic bullet in trading. So this reversal riddle, it's one of the hardest problems in trading. In hindsight, trends look so smooth and obvious, right? But when you're in the moment, it's just a fog of war. Is this little dip a healthy pullback, a golden opportunity to buy more, or is it the first crack in the dam right before a total collapse? Guessing wrong here is, frankly, one of the fastest ways to blow up an account. And this is exactly where the Quasimodo, or QM pattern, steps onto the stage. For serious price action traders, this pattern is like a potential golden key. Why? Because it's not just looking for a loss of steam. It's designed to spot a definitive, structural break in the market that screams, hey, the smart money just changed their mind. It gives you a shot to get on their side before the new trend becomes obvious to the entire world. So, what on earth is it? Well, officially, it's an advanced chart pattern that flags a potential reversal. But the keywords here are a shift in market structure and institutional manipulation. Think about that. The whole idea behind this pattern is that the big banks and funds will often shove prices around to trigger everyone's stop losses, what's called a liquidity grab, before they make their real move. The QM is basically a treasure map that tries to show you that exact maneuver. And yeah, what about that name, right? Quasimodo. It's actually named after the Hunchback of Notre Dame from the famous novel. And it makes perfect sense once you see it, because the pattern has this unique, asymmetrical, kind of hunched back shape. It's definitely a name you won't forget for a shape you'll want to remember. All right, let's roll up our sleeves and get into the nitty-gritty. Understanding the anatomy of the Quasimodo is absolutely essential. This isn't just about spotting some random shape. It's about reading the story the price is telling you, step by step. Now, it comes in two flavors, a bullish QM for spotting market bottoms and a bearish QM for nailing those tops. The first thing you've got to notice is that asymmetry. It's not a perfect, pretty pattern. And that's the point. See, in a bearish QM, that right shoulder area only forms after the price is already punched down to a new low. This little detail is what separates it from other patterns, and honestly, it's the secret sauce to its predictive power. Okay, let's walk through the bearish Quasimodo step by step. First, you've got a beautiful, clear uptrend. Everything's going great. Then, boom, you get a final, explosive higher high. We call this the head. Breakout traders are probably jumping in with both feet right here, feeling like geniuses. But then, step 3 happens. This is the moment everything changes. The market doesn't just pull back, it crashes through the last swing low, creating a lower low. This is a 5-alarm fire. The uptrend structure is officially broken. The last step is the retest. Price drifts back up towards that first peak, the left shoulder. For a QM trader, this is the kill zone, the prime spot to enter short, because they expect that level to act like a brick wall. And this captures the market psychology perfectly. As Dr. Emily Carter from MIT puts it, the QM works because it captures the market at a point of total exhaustion. That break of structure means the buyers have finally run out of gas. That little retest back up to the left shoulder, that's often the last gasp of hope for the bulls before the pros, the smart money, step in and really drive the price down hard. Now, I know what a lot of you are probably thinking. Hey, this sounds a whole lot like the classic head and shoulders pattern. And you're not wrong, they're definitely related. But there's a critical difference that gives the Quasimodo its killer edge. It's an earlier warning signal. Okay, check this out. It all comes down to timing. A classic head and shoulders is pretty symmetrical, and traders usually wait for the price to break that horizontal neckline to confirm the reversal. But by then, a big chunk of the move has already happened. It's a late confirmation. The Quasimodo, however, is defined by that break of structure happening first. It creates a lower low before the right shoulder is even a thing. This means the QM is screaming reversal much, much earlier, giving you a chance at a way better entry and a juicier risk to reward ratio. It's a leading signal, not a lagging one. So that's the theory, but theory doesn't make you money, right? How do we actually put this thing to work in the real world? Let's build a simple, practical playbook for trading the Quasimodo. Here's a 5-step game plan. Number 1, context is king. The QM is a reversal pattern, which means you need a solid trend that can actually be reversed. Second, you gotta spot all the key parts we just talked about. Third, and please, do not skip this step. Get confirmation. Don't trade the pattern blind. Is your RSI indicator showing divergence? Is your MACD crossing over? You need other clues to back you up. Fourth, you plan your entry. You're waiting patiently for that retracement to the left shoulder. And finally, number 5, you manage your risk like a pro. A logical stop loss goes right above the head, and you've got to have your take profit targets planned out in advance. Let's look at a real-world example from trader John Lee. Back in May of 2025, he spotted a beautiful bullish QM forming on the EUR/USD 4-hour chart. But he didn't just ape in. He waited. He watched the price pull back to the left shoulder, and he got extra confirmation from an oversold RSI reading. Then he pulled the trigger, went long, tucked his stop loss just below the head, and bagged a sweet 1-to-3 risk-reward trade. Just like he says, the pattern is precise, but that discipline and confirmation, that's non-negotiable. Now, it's really easy to hear all this and get super excited. I get it. But we have to take a deep breath and have a serious reality check. There is no pattern in trading that works 100% of the time. Period. The Quasimodo is a fantastic tool, but it is not, I repeat, not a holy grail. Knowing when it fails is just as important as knowing when it works. And here's the big one. Market context is absolutely everything. A 2025 study from Light Finance found that the QM can fail as much as 35% of the time in markets that are in a super strong runaway trend. Think about it. When momentum is just off the charts, what looks like a QM reversal might just be the market taking a quick breath before the primary trend takes off again like a rocket. Trying to short a freight train is a really bad idea. This chart just says it all. Look at these numbers. In a choppy, sideways market like GBP/CHF, the QM was a rock star, winning 75% of the time. But look over at USD/JPY, which was in a monster trend. The win rate plummeted to 52%. That's basically a coin flip. The data is crystal clear. This pattern shines when a market is exhausted, not when it's in a full-blown sprint. And here's the human story behind the stats. In June 2025, a trader named Sarah Kim saw what she thought was a textbook bearish Quasimodo on USD/JPY. She took the short trade. But then, the Fed released a surprise statement. The dollar went ballistic, and that powerful uptrend just ripped right through her setup. She lost $1,200. It's a painful lesson that major news events will always trump any pattern on your chart. And of course, we've got to talk about the battles we fight in our own heads. Impatience is a certified account killer. You see that structure break and you jump the gun only to get stopped out when it retraces. The opposite is just as bad, paralysis by analysis. You wait for 10 different signals to line up perfectly and you miss the entire move. But the biggest traps are trying to force a QM against a raging trend and overtrading when you start seeing the pattern on a 1-minute chart and think you found a money printing machine. Discipline is the only thing that will protect you from yourself. Which brings us to a final, really interesting question to think about. Is the Quasimodo pattern a genuine map of what the big institutions are doing? Is it a true glimpse into how they trap retail traders and engineer a reversal? Or is it just a random shape that our pattern-loving brains are forcing onto the natural chaos of the market? The truth is probably somewhere in the middle, but the fact that it works so well in the right conditions tells me it's definitely capturing something real about how markets turn. The Quasimodo gives us a fascinating way to look at market turning points. It's not easy, it requires patience, context, and a ton of discipline, but it provides a really clear framework for trying to get ahead of those major reversals. To dive into more advanced financial strategies just like this one, make sure you subscribe to Wealthy Lead. Thanks so much for joining me.